Here,
I'm Casey Kerfoot.
and we have a guest with us today. Joining us from Marine Bank is Kathina Perkins. She is a mortgage lender, and we just wanted to take some time to chat with her about what's going on with the market and home loans. So we're just gonna kind of do a little Q&A here.
Good. Okay. How long have you been a mortgage lender?
I have been doing lending for a little over 5 years now.
Okay.
Can you walk us through the general process of applying for a home loan?
Yes, so you'll want to gather certain documents, financial records, and basic like driver's license, ID, just so we can verify the documents are yours. You'll either send them to a lender or drop them off, and you'll just kind of go over what you're looking for as far as like type of loan, or maybe we can help you decide what type of loan you want to be in. And then we'll kind of put on an actual application with the documents that you brought in, plus with whatever type of loan we're thinking is going to be your best fit. And then we'll go through that. Should only take maybe about half hour to 45 minutes, depending on the situation. But we should be able to give you some pretty great numbers right from the beginning and go from there.
Perfect.
And then what is the minimum credit score needed?
So that's definitely dependent on what type of loan you're going for. So VA and FHAs do allow for much lower credit scores, so those will go down to 580. And then as far as a conventional loan, we typically strive for like 680 and above, but we can go a little bit lower depending on like down payments and other history.
So there's more than one factor that determines.
Exactly. There's tons of different things that we look at: down payment, credit history, type of loan, obviously. But yeah, whether you're retaining your current home, selling it, those all play into a factor.
And then how much do you need as a down payment typically? Like what's the minimum?
Okay, so that also is dependent on what type of program you're in. So if we're looking at VA, we can go all the way down to a zero down payment. FHA, we're looking at 3.5%. And then conventional, depending on your previous home status, we can do 3 or 5.
Okay. And what types of loans are you a provider of?
So I've kind of gone over those already. So VA, FHA, conventional. So that's Fannie Mae. And then we also do IDA loans as well.
Do you do rural development loans?
Oh, yes. I totally forgot. We do USDA. Yes.
And are those zero down too?
Those are zero down too. Yep.
Okay.
What grants do you have available?
So our primary grant is Down Payment Plus. So that's a up to $6,000 grant based off of household family size and income.
Okay. And then are there any grants for non-first-time home buyers?
Yes. So you can also do IDA grants, which is with an IDA program. And those are not based off of whether you've owned a home before.
Okay. And can those be used with the other types of loans, or is that considered just with an IDA loan?
It's an overlay. Yeah. So you could do a conventional with an IDA, and then you can actually use both Down Payment Plus and IDA if you qualify for both.
Okay.
So that would maximize your grant funding.
Okay. And then the question we always ask, what are rates?
Okay, so today we're looking at a 30-year at 3.75. That's what I checked this morning. And then to get a rate reduction just on rates, we're looking at 15-year, and they're looking at 3%.
Okay. So in general, are rates going up, going down, staying pretty steady?
Yes, I'd say over the last couple of weeks they've drastically increased. They've been holding steady the last couple days or so, but I still think they're on the rise.
Okay. Is there a way for somebody to lock those rates in?
So
what they are, so like say they're starting to look now.
Mm-hmm.
Lock in the rates in case they're not finding something for a little while.
Okay, so with our programs, we cannot lock until you have your contract in hand.
Okay.
But we can lock those up to 90 days out.
All right.
Yeah. And then what are your average closing costs?
So that can range depending on purchase price.
Oh, did I mess up?
So the average closing costs, they can go anywhere between $2,200 up to $3,000, just depending on the program.
So So aside from closing costs, I'm just gonna add in, so if you've got the bank closing costs and your down payments, the other things you wanna prepare for if you're getting ready to buy a home is you also want money set aside for your inspections if you're doing those. So those, depending on the inspections you do, range from $60 to, I don't know, up to 500.
Yeah.
So you know, depending on the house is gonna depend on what, inspections and stuff. So you also wanna allow money for that as well.
To add on to that, so not only depending on just the house, but the type of loan you do can also require certain inspection.
Oh,
If you're
that's a
going
good point,
for
yeah.
like a standard conventional Fannie Mae loan, the requirements are much less. But if you're going anything with the government, they're going to require certain ones needed.
Alright. And, how do the interest rates affect your mortgage?
So long term, you have interest that you pay over the lifetime, and then also you are looking at a monthly standpoint. Going from even an eighth of a percent increase can change anywhere between, you know, $10 to $70, depending on loan amount.
Yeah, so Casey and I were playing around with the numbers last week. So for example, they're predicting, which obviously a prediction is just that. There's no way to know. But they're predicting that interest rates will be around 5% by May, is what we keep reading.
Yeah,
seeing.
but you know, prediction.
It is. But so we were just playing with it to see how that affects someone's buying power compared to what it is now.
Right.
So we looked up the prime rate. So we just use that as kind
The
of our
start place.
baseline
Right.
starting place. So we compared, and that was 3.25
Yeah.
on Friday was prime. So we put that in for a $250,000 loan. And then we compared everything else exactly the same, like all other terms exactly the
Sure.
same type of loan, same everything.
Mhm.
And we put in for the predicted interest rates in May of, well, we put 5.25 because
Just like-
yeah.
Yeah, we wanted to keep it.
And it actually made it so that a payment at 200,000 was within $10. It was only $10. You only saved $10 basically
per month.
per month
Per month.
for your mortgage payment between 200,000 and 250. So if you're one of those people on the fence thinking I'm going to wait until the housing prices come down, you may be able to afford a lot less house if the interest rates do in fact go up.
Mhm.
And so you may be just as well going ahead and just starting to look now and see if you can find something.
Yep.
So that's just my opinion.
Yeah. No, it was cool. It was interesting to see like the big difference in just like in
Mhm.
price. 'Cause,
to
I mean,
see
it was,
how it really does
yeah,
affect
because I mean it was
buying
like
power.
either you can afford 250 now or 200 later.
Yeah.
So it was like very interesting.
So, and what is included in the closing costs?
So closing costs are going to be any of the bank fees, title fees, and any of your prepaid. So that includes like, you know, escrow funding. You know, I don't typically like to count that in there, but when you actually truly say closing costs, that they do take that into. When you look at the loan estimate, they do include that in the same page.
And for
So-
people that don't know, what are escrow?
Escrow. Okay, so prepaids are going to be like your homeowner's insurance that you're paying for a year up front, especially if you're escrowing, because we want to collect that with your monthly payments. That way, all of that whole year's worth is there for when next year's bill comes due. And then you've got your property taxes as well, which we pay taxes in the rear, so then we have to fund it, so that way it's all ready to go again for the next year.
Oh, sorry. What is your favorite thing about being a mortgage lender?
Just being able to help different situations. You know, some are pretty cut and dry. They want to buy a home. They already know kind of what they're looking for. They're just shopping lenders, you know, based off of fees and previous experiences and stuff. But as far as like helping like new home buyers, finding out like, you know, or people who are just scared to come in and they're like, I don't know if I'm qualified at all, but they come in, I'm like, you are well qualified. You are ready to go. Let's get you that letter. Or we've got, you know, people who are going through specific life situations and they're, you know, trying to put themselves in a better spot. And I love it when I'm able to help them just get to that like comfort zone, you know, that where they're not stressed with their daily lives and stuff like that. So that's really awesome.
Yeah.
And what is the difference between being pre-qualified and pre-approved?
So pre-qualified means it has not been underwritten with an underwriter. Pre-qualified means pre-approved means it's looked at through an underwriter. Basically, if you're doing a pre-qualification with a lender, the lender has collected your documents and they've reviewed it, and based off of their knowledge and their automated system, they have confirmed that you're probably good enough to get to the closing stage, that there shouldn't be any hiccups along the road based off their previous experience. So things do happen sometimes, but usually you are pretty good with a pre-qualification if you're with a reputable lender.
Now, if someone wants a pre-approval letter, can you do that even if you don't if you're like, no, I think could they?
If they
Can they
want to
decide to
take
do
that
that?
extra step to do a pre-approval, we can do it. It
Okay.
does require a little bit of work in the beginning before you put that offer in, because it does go through full underwriting. So we would collect all documentation and send it through. But yeah, it is an option.
Does it
There's
save
no
them time
cri-
later?
Yeah, it can. It can save them time later. Yeah.
Okay.
And then how do they know which mortgage option is right for them?
That would be definitely discussed with your lender, because they're going to tell you different options as far as like what your goals are. If you're looking to put least amount down later because you're going to make much higher payments to get that principal paid down,
Mhm.
we'll talk you into that scenario. Or if you only plan to be in that home for 5 years, maybe we're not looking for something that has such like a high repayment or whatever. So your lender is really going to guide you through that.
All right. Well, if anyone has any other questions or looking to get their pre-approval, reach out to Kathina. We will go ahead and put her contact information in the comments. But again, she's with Marine Bank. And so you could always, Google it as well.
Yeah.
Find her.
Well, and I
that
guess
way.
what is the best way for people to
To contact
start
me.
the pre-approval? Is it
Yeah,
easier to go
good
online
question.
to do that?
So you
or-
can do either. We have an online option where you just go to ibankmarine.com, you go under lending, and you can submit an application. You can reach out by phone, email, honestly, whichever avenue is simplest for your daily life, we'll take it.
Okay.
We'll help you through that.
Okay. So we'll put the link as well for the pre-approval link as well in the comments.
And other than that, if you have other questions, home market questions, reach out to Casey or I. We are happy to answer those or get you pointed in the right direction. But thanks for watching. You can like us on Facebook or subscribe to our YouTube channel to make sure you don't miss any of our fun videos.
Yeah. Thanks.
Bye.
End stream.
I don't see it.